Hello everyone, I'm Keith, and today we're going to talk about what it's like buying a house in 2021 and some tips on getting your offers accepted. Buying a house is like playing a complicated sport. You need to know the rules and get in shape before hitting the field and then nimbly maneuvering through challenges to win the game. In 2021, winning an offer on a home requires understanding how you stack up against lender qualifications and preparing to compete with other buyers. Unfortunately, there are more buyers than homes for sale on the market, and if you find a reasonably priced house in good condition, chances are you won't be the only one making an offer, even if it's brand new to the market. It is a seller's market in just about every part of the country. The phrase seller's market is a real estate term used when there are more prospective buyers than homes for sale on the market. For buyers looking to purchase a home, this means flexibility is very important and you may have to make some concessions. For example, it's tough to win over a seller in a hot market if you make the purchase offer contingent on the sale of your current home. That's like a nail in the coffin. On the other hand, understand the risk of any concessions you offer and don't make any that you can't afford. Talk to your real estate agent to understand your local market and how to put yourself in the best position to get your offer accepted. Real estate experts expect home prices to go up in 2021, but not as fast as they did in 2020. Prices of existing homes are projected to increase 5.9% in 2021 compared with a 10% jump in 2020. Now, home prices vary by season, so when you choose to buy can really impact how much you'll pay. Homes are generally most expensive in June and July and cheapest in the winter months of January and February. Active home listings are also highest in the warm months, which means you'll have more homes to choose from, but demand is high then too, so homes sell more quickly. Buying a home in 2021 won't be like buying a home in normal times. For one thing, there's still a pandemic raging, so instead of open houses galore, you may need to use an online listing and virtual tours. But that's not the only issue you're going to grapple with today. Today's housing market is extremely tight, with supply at an all-time low. That means you might struggle to find a home you like in your price range. If you're going to attempt to buy a house this year, be sure to employ the following tips. Know your monthly spending limit. If you take on too high of a mortgage, it could cause you to fall behind on other bills and potentially land you in unhealthy debt. Once you figure out how much you want to borrow, run the numbers through an online mortgage calculator so you can see what you'll spend on principal and interest for your loan each month. Make sure you're comfortable with that number. If you're not, plug a lower loan amount and work your way downward until you land on a figure you can afford. Make that number your maximum and stay under that monthly payment amount. You're also going to want to pay attention to property taxes. When you buy a home, you won't just have to pay principal and interest on a mortgage every month. You'll also be on the hook for the property taxes. So be sure to find out the potential property tax bills for any home you look at. Your realtor can help you with this. Make sure you add those taxes into your mortgage payment and stay under your maximum budgeted amount. Get approved for a mortgage. Now that you know what your maximum that you're willing to pay per month is, you're ready to start house hunting. It's time to get pre-approved for a mortgage. When you apply, your lender will give you a pre-approval letter that states how much you're approved for based on your credit, assets, and income. You can show your pre-approval letter to your real estate agent so they can help you find homes within your budget. To get pre-approved, you're going to need to apply with a lender. The pre-approval process typically involves answering some questions about your income, your assets. They'll need your recent pay stubs and W-2 forms along with a bank statement. It will involve a credit check as well. The bank frequently will be able to give you more than you have set for your monthly maximum budget. Tell the lender what your maximum is and have them give you a pre-approval letter set at that maximum amount. Prepare to duke it out with other buyers. Limited home inventory means once you find a house you'd like to buy, you may find you're not the only one interested, and that means you're going to gear up for a bidding war. Bidding wars are great for sellers because they generally mean someone ends up offering more than the asking price. But as a buyer, it's the last thing you want, so do everything you can to come out victorious. That doesn't necessarily mean making the highest offer. Most buyers are escalating their prices well above the list price of the homes. So everybody's going to be offering a higher offer price. Oftentimes, the winner is the one who is willing to pay seller's closing costs, waiving inspections, more down payment, and extending the closing date to meet the seller's needs. You may have to adjust your offers as you learn, but be prepared to put in a very competitive offer if you want your offer to beat out the other offers. There are risks involved with eliminating these contingencies in your offer, so make sure you talk to your real estate agent so you understand all of the details. Understand what your down payment and closing costs are, and make sure you're comfortable bringing that much cash to closing, especially if you're offering to pay sellers closing costs or have offered to bring money to the closing if you receive a cut appraisal. Your down payment is a large one-time payment toward the purchase of a home. Lenders require a down payment because it mitigates the loss they might suffer in the event the borrower defaults on their mortgage. Many home buyers believe that they need 20% down payment to buy a home. This isn't true. Plus, a down payment of that size isn't realistic for many first-time home buyers. However, in this market, the larger down payment you can afford, the stronger your offer is going to look to that seller. Fortunately, there are many options for buyers who can't afford a 20% down payment. For example, you can get a conventional loan for as little as 3% down, or an FHA loan that has a minimum down payment of 3.5%. Unfortunately, in this seller's market, conventional loans will often beat out FHA loans, even if the FHA buyer has a larger offer. If it's possible, try and get approved conventional so that you have a stronger offer. There are advantages to making a larger down payment. For one, it typically means you'll have more mortgage options. It also usually means you'll have a smaller monthly payment and a lower interest rate. Plus, if you put at least 20% down on a conventional loan, you won't need to pay for private mortgage insurance, saving you money. Know what your closing costs are as well. This is a separate amount of money that you will need to have for closing other than your down payment. Closing costs are fees you pay to get the loan and the charges for the title company to close the escrow. There are many variables to go in determining how much you'll pay for closing costs, but it's usually smart to prepare for 3 to 6% of the home's value. This means if you're buying a home worth $200,000, you might pay $6,000 to $12,000 on closing costs. Almost all home buyers will pay for things like appraisal fees and title insurance. Your real estate agent can give you an estimate of both your down payment and closing costs before you decide to make an offer on a home. Before you close on your loan, your lender will give you a document called a closing disclosure, which lists each of the closing costs you'll need to cover and how much you'll need to pay at closing. Look over your closing disclosure carefully before you close to know what to expect and to catch any errors that the title company may have made. Don't rush the home buying process. Many people are eager to buy a house in today's market with the interest rates on mortgages at the historic lows, but that doesn't mean you should push yourself to find a home immediately. Mortgage rates are likely to stay low for a while, so take the time to find a place that's right for you and your family. If you need that extra bedroom, don't settle for a home that doesn't have one. If you want the option to build a playroom for your kids, don't buy a home without a bonus room or a basement. If you want a certain school district, don't sell yourself short and settle for one that's not up to your standards. A home is probably the single largest purchase you'll ever make, so allow yourself ample time to find the right one. Buying a home this year is likely to be challenging. Follow these tips, and with any luck, you'll end up with a home you can enjoy and afford with relative ease. Not done watching? Click right here to watch the next video. Thank you for watching, and don't forget to hit the like and subscribe button.